Good morning and welcome to Almus Market Mornings. Markets were quiet yesterday with the US closed for Memorial Day, but attention is turning back to Japan's bond market. After last week's week 20-year auction rattled investors, super long yields have started to ease slightly ahead of a key 40-year bond sale on Wednesday, one that could again test the demand in a fragile market. Meanwhile, ECB President Christine Lagarde spoke of a potential global euro movement, framing this as a critical window for Europe to assert more economic leadership, though, as she put it, it's not a privilege that will be simply handed over. Morning, JK. Quiet day yesterday. What do you think markets would focus on in the coming days?
Good morning, Swaraj. Yes, it was a day on which major markets, UK and US, were closed, and among the other markets, Europe was open, and the Asian markets generally don't have a big influence on setting the direction. So it was a very rangy market as far as uh, the equities and even currencies were concerned. But all attention was on Europe as the Trump administration reversed their initial proposal to impose 50% tariff on European exports from June 1. And that was, seeing a good reaction from the European market. Stocks recovered. Euro also recovered to above 1.14. And then even the bond market was quite steady. And for Europe, as you said, the statement from the ECB President Lagarde is quite timely because she's said that it is an opportunity effectively for Europe to replace as a viable alternative to the dollar as a reserve currency. But she's also saying if the governments can strengthen blocks of financial and security architecture and Europeans and the growth picture. That is what she's saying. So I think this is something for a medium term. Definitely, it is good to see the central bank and the euro region wanting to use this opportunity to assert Europe's influence in the global markets. In fact, even the Central Bank of China has not lost an opportunity. They have actually increased the ratio of yuan-denominated trade transactions from 25% to 40% as part of their recent adjustment to, the so-called macroprudential assessment. And while this is not mandatory, banks are indirectly being forced to, or rather. Um, Influenced to increase the ratio of yuan-denominated trade transactions with other countries. So they're also using this opportunity. Why not? Because this is a situation where it's a sell America theme that has been dominant for quite some time, and every which way you see the American dominance is definitely coming down. Investors are heavily positioned in the US assets, and uh, there is a huge amount of policy uncertainty as far as US is concerned. So that's where these statements have become quite relevant. Of course, even uh, once again, there was a big statement from Trump also saying that the spending and tax bill that is likely to go to the Senate will see significant changes. Whether these significant changes mean that they will introduce more spending cuts, or whether the tax cuts will be slightly moderated, because they are also worried about the fiscal worries which is haunting the investors. So we'll have to wait and see how it pans out. Yes, for the coming week, for the rest of the week, of course, we have a good amount of data lined up. We have the US GDP, US PCE core inflation, German inflation numbers, and from India also we'll have the first look at the Q1 GDP for 2025. Last quarter we saw a growth of 6.2%, and this time markets estimate is around 6.7%. So that's a very important number that we will look forward to as we end the month of April. But as we, sorry, May, it's also significant that as we are ending the month of May, dollar index is also closing at its one of the lowest levels, and it could be No, if it can close below the 98 mark, I think it will be setting stage for the next big downfall in the dollar. So technical traders would be watching this. In fact, 98.50 itself is a very important level that the market will be looking out for. As far as the Indian markets are concerned, the rupee mostly traded stronger yesterday, continuing its positive sentiment from Friday. But again, imported demand was quite strong below 85. So we did not close below 85 yesterday. In fact, related to many other Asian peers, rupee has underperformed recently, and the real effective exchange rate, the RER, which indicates whether the rupee is overvalued or undervalued, is now currently at 100. It's almost at parity, which means that rupee, which had been overvalued for quite some time, is not anymore. Now, a drop in inflows and a cautious approach by foreign investors in the context of India-Pakistan conflict, despite stronger domestic fundamentals, has kept the rupee's gains in check, and this is likely to continue for some more time, until we see better calmness, returning to the returning among the two Asian powers. Broad range of 84.40 and 85.60 is what I'm expecting, unless we have a bigger drop in the dollar index. I think that dollar index move, we'll have to wait the data of this week. And of course, the trade talks which are ongoing with various countries, even India also likely pushing for a trade talk to be finished by before the July 9 deadline. European officials also have offered come out with better deal, so that they don't want to continue any uncertainty as far as the tariffs are concerned. So a lot to look forward to, although it was a quiet day yesterday and in terms of data and the events, and markets are looking to see what big direction that the dollar and the asset markets take in the coming days. Thank you.
Thank you, Jagan. I think one theme is evident that countries are definitely trying to take advantage of the sell US theme, which you mentioned. Whether it is the ECB chief who said on the euro's influence that could be increased, or the yuan-denominated trade transactions being increased to 40% by the PBOC. So essentially, that theme is playing out. The data which we need to take into consideration this week for the markets would be the US GDP, PCE, the German inflation numbers, and Q1 India GDP. So all of this would be crucial for the current week. When it comes to rupee, we traded stronger yesterday, but imported demand was quite strong below the rupees 85 mark. The prices quickly bounced back above rupees 85, and as Jackie mentioned, the themes of flows would need to be closely watched to ascertain more of a directional move. That's it from us today. Thanks for listening. Bring tomorrow for the latest on the financial markets.